Hey, what's going on, everyone? Today is September the 30th, 2022. We're going to talk about this article from Yahoo Finance. We got Jim Rogers telling people that this is the final rally for the stock market. Everyone run for the hills. It's time for the market to crash. It's time for the recession, the depression. You know what? With all of this fear and uncertainty that is going on within mainstream media, social media, like every content that you see being created today is pushing that same narrative, right? Well, I'm here to show you that even amidst the chaos, money is still on the move and money is going somewhere. And our job, while we're in the midst, going through all of this uncertainty of what people and their opinions are being shown, is that we need to be finding these areas to where money is going. All right. And I'm going to show you off of the price chart how you can tell which industry or which stock is performing better than what majority of stocks that people pumped in 2020 and 2021. Now, if you guys appreciate my videos and my content and you appreciate my perspective, I definitely want you all to continue to join me on this channel, because I know a lot of these other YouTubers have been out pumping stocks all of 2020, 2021, and they saw a monumental movement higher in those stocks. Well, now the environment has changed, and now those same YouTubers have moved on into pushing hope. They're the newest hope dealers, not dope dealers. They're hope dealers within their own realm. They're pushing hope now and inspiration, not knowing that it's all about results. The stock market is not the place to push inspiration. If you want to do that, you need to go join a monastery or some type of other religious organization. The stock market is all about results and making money. All right, you guys can see that Jim Rogers is also voicing his opinion. Take a look at it. Jim Rogers just warned about getting too excited over the market's recent bump. Now, he has some shatterproof assets that he thinks we might need to look at. So we're going to look at them. All right. So now let's go through this article real quick, and then we're going to talk about what industry or sector is he focusing his attention at. All right. So you guys can see, and I quote, that he is telling ET now, and I quote, "Now it looks like inflation and pessimism is breaking, but just remember, this is probably the last rally." Now, why would he say that? Because he's been in the game a while. He's been in the stock market for decades. And for him to say a sentence or a statement like that, that this is probably the last rally, then that means that this is going to be decades upon the stock market not going up, right? So when we visualize this, if the market is just going to trade range bound for decades, years, how can we make money? Because so many people want you to hold stocks for 5 to 10 years, right? But what if the market just trades sideways for that duration? What if it just trades sideways for the next 5 to 10 years? You won't recuperate a lot of profit that way. So it seems to me that your plays needs to be lessened. That once you come into a play, you need to know where you're going to get out, whether it's going to be a time frame or a price. You need to know when you're going to get out, because the market is not just going to shoot up. If Jim Rogers is telling us that this is the last rally, then we cannot expect prices just to go up continually. So when we get into a play, we need to either know when we're going to leave the play. Now, there's two ways that you can leave. You can leave it on a time frame, like I'm going to leave this play in the next 3 months, or you can leave it on a price. I'm going to leave this play when the price hits $40 or $400, whatever the case may be. Now, he also mentions the euphoria we previously saw around special purpose acquisition companies. Now, this is what these YouTubers were pushing in 2021. They were pushing SPACs. And a lot of the stocks, when they originally got public, did shoot higher. But the sad part is that those YouTubers were telling their subscribers, their viewers, that, hey, yeah, hold it for the next 5 to 10 years. And now many of those SPACs are down 70, 80, 90%. No, you should have sold it as the market ran up, because that is what so many other people on the inside did. The YouTubers didn't know that they got played. The YouTubers who was pushing SPACs day in and day out, saying that price is going to go up, just got played. because the insiders who held those stocks sold it to the willing market that these YouTubers created. They don't even understand that. Everybody comes in betting on SPACs, but SPACs have been around for years. See, Jim Rogers know that that's not a new vehicle. SPACs have already been around for years. This is just the retail market didn't know nothing about it. Jim Rogers knew about SPACs for a while now. So while these new YouTubers have garnered a whole lot of subscribership around SPACs and pumping SPACs, Jim Rogers like, what? Okay, cool. This is nothing new. SPACs been here. It has all happened before. The lesson here, as Jim Rogers tried to explain, is that usually towards the end, stocks go crazy. That's exactly what happened. Stocks went crazy. Now, what is he looking at? Well, you guys can already see the key word. He's looking at commodities, right? Jim Rogers is placing some of his money in commodities. He created the Rogers International Commodity Index in 1998. The fund that tracks the index, Elements Rogers International Commodity Index total return, is up 12% year to date. You guys never heard of this one before, have you? No, you haven't. Because the insiders, those who are wealthy, are not going to drop their plays. RJI is the ticker symbol. We're going to look at the chart. Now, this is what he says, and I quote, "I own commodities, and commodities certainly are going to do well because of supply constraints that are developing, and the central banks will print more money eventually because that is all that's all they know to do," he says. Have you guys heard about the Bank of England buying up limited amounts of bonds? That's what he's talking about. They're just going to print more money. So he's in commodities. That's where he's at. Now let's go ahead and look at this index real quick, RJI. All right, because I know no YouTubers have shown you all this index. Here it is right here. It's linked to the Rogers International Commodity Index total return. You guys can see that this particular market has been in an uptrend ever since 2020. Take a look. Here it is. The market has been in a downturn into the market, and this particular cryptocurrency, this particular index have seen price rise. This is what he has been talking about. This is where he is seeing the return of the commodities, right? So you guys can see the last couple of years, we've seen the market starting 2020, 2021, and the market ran all the way up to a high of, let me see, $9.79. You guys can see up here, the market currently is up 14.47%. Right? So, long and short, this is where he's at. When asked what he would do long for the next 3 years, his response was simple: silver, maybe agriculture, food, commodities, right? Silver's first. Silver is down something like 70 or 80% from its all-time high, and gold is only down like 15% below its all-time high. I will buy both at the right price, but at the moment I would prefer silver to gold. So let's go ahead and look at the silver. All right, so here's silver. So yeah, silver is down around 18% year to date. You guys can see. And you go to gold, you guys can see that gold also is not that low, 8-9% right now year to date. Look at all the volume that's coming in for this year. So yeah, I would prefer silver over gold too, because once that interest demand comes into these commodities, these precious metals, you guys can see that silver will probably outperform gold. Okay, so he's in commodities, he's in silver. His next pick will be gold. His maybe fourth pick would be agriculture. The one thing, the host also asked Rogers what he would short. What would he sell? Okay, this is what he would sell in the next 3 years. Now, all these YouTubers are going to tell you all to buy the dip on these stocks. I just want you all to know that. But he's telling this interviewer that he will sell these stocks. Keep that in mind. Who would you rather listen to? A veteran on Wall Street or YouTube who just picked up these stocks the last year? Look at it. The one thing I would sell would be the American stock market, not any market. No, not any stock market, the American stock market. So he won't sell the Chinese stock market. He won't sell the European stock market. He won't sell the Indian stock market. He will sell the American stock market, because every economy of the world is not going to be impacted the same. Some will be more severe. Others won't be impacted as much. If you guys were to look at the Indian stock market, you guys begin to see that something is going on in India. Their stock market is not being impacted by the global economic uncertainty or chaos that is currently being thrown. I'm sure to you. Now, this is what he will sell. He will sell the FANGs. You guys remember the all important acronym FANG? Facebook, which is now Meta, Apple, Amazon, Netflix, Alphabet. He said he will sell those. So now check this out. When you guys click on another video on YouTube, you're going to hear these YouTubers talk about these stocks. They're going to tell you to buy it on the dip, buy it on the discount. But this man is simply saying he will sell it for the next 3 years. Now, let me show you all this too. I wanted to show you all the Indian index, right? So you guys can see right here, the Nifty. Take a look at that. This market is definitely stronger than, what would you say, the Dow or the NASDAQ? What about the 500? Look at the Nifty. Take a look. Look how level this particular market is maintaining its price. Look at that. So let me show you all the other charts. All right, so let me separate it. So we got the Nifty on the top. We're going to place, let's do the Dow on the bottom. Okay, let's put this on a 3 months chart as well, or the monthly. So this is the monthly chart. Okay, here it is. This market is maintaining its price. The Dow was going down. So all you have to do is simply connect what we got going on. And you guys can pretty much see that the market is staying elevated in the Nifty, but downtrend is in place for the Dow. Okay, you can see that. And then let's take a look at the NASDAQ then. Let's look at the NASDAQ. You can see the same thing. The Nifty is maintaining its price. The NASDAQ is trending down. So we can see which economy is doing a lot better. You don't have to research and do a whole lot of in-depth analysis as to figure out, okay, where's the money going? The chart is telling us where people are placing the money. India is a stronger economy off of the NASDAQ, off of the Dow, off of the S&P 500. Like, the chart's not lying. All we have to do is figure out how to break these charts down and figure out what does it mean. See, all three of these indexes, these American stock markets that Jim Rogers is talking about, is down. But India is not. Think about it. Let's look at the Japan, the Nikkei. This is the Nikkei. Do you see this market being impacted? Is it in a downtrend too? Not yet. It's consolidating just like the Nifty is. What about the Hong Kong market? See that? Japan is not being impacted as much in the economy right now. But then you go to the Hong Kong one, it is. Look at that. This one is more deeper than the S&P 500 and NASDAQ and the Dow. So take a look at the chart. The answers are already here. If you guys are trying to figure out, okay, where do I need to place, my money as we go through this uncertain time, the chart is already telling you what everyone else is doing. That's why I only focus in on the chart. So now that is it. Okay. Let me go ahead and cut all this stuff back. And I'm done. I just want to come in and give you all this perspective as to how you can tell what's really going on into the stock market, what to expect, what to look forward to, because you all can see where the money is going. This is what he thinks. I want to know, what do you all think? Let me know. All right. Now, another thing before I let you go. Now, this is not me doing a price prediction. I wanted to show you some other industries that is also doing pretty good, right? This is one stock right here, which is AbbVie. You guys can see right here that AbbVie is pretty much trending higher. We're in an uptrend, right? That's one. Second one is Biogen. Look at Biogen. This market is not in a downturn as severe as some of the other options are. Matter of fact, we're seeing a massive move higher for this current month. Look at the chart. See where the money's going. Tell me, where do you think the money is going right now for one of your other stocks that you guys have been eyeing? Just let me know. Make sure you maintain the profitability. And as always, trade different.